Brian, it's great to have you here. Before I ask about a couple of the sectors that jump out at me, do you think stocks overall are headed higher?
I do. I think this is a correction within a long-term bull market. Even though stocks have been whipsawed since the end of February, credit investors have bought 150 billion of new corporate bonds this month. Despite all the turmoil in the Ukraine, despite all the worries about the Fed and inflation, they keep buying corporate bonds, and that money is eventually going to go into buybacks. And I think when stocks get above the 4,400, 4,500 area on the S&P, that's usually a good time for the Wall Street buyback desks to commit capital when the 10-day volume weighted moving average goes above the 50-day.
So in other words, we are starting to see a rebound, and that will be followed by a lot of buybacks that for years have been helping to bolster this market. Any warning you'd give about the Fed here, or how overall is this rate hike and their plans for 6 more rate hikes this year being taken by the market?
If you look at the money market, specifically the U.S. Euro-dollar futures market, that's the largest futures market in the world. They've priced in the Fed going up to 275 next year,
Wow.
and then having to bring rates back down. So we're already pricing in an easing cycle just as the tightening cycle begins. And it's been priced that way for a while. So I think this is pretty much baked into the markets already.
Oh, that's fascinating, and may help explain why yields are kind of not surging a lot higher today, even as they catch up to the Fed's projections. All right, so against that backdrop of stocks headed higher, why is biotech in particular jumping out to you here for some technical reasons?
Well, they're one of the main players in the buyback space, and they have good products and good momentum. Their stock prices have good momentum. They've started outperforming in February for the first time in over a year, so they've been kind of beaten down, and now they're starting to come back. And they have great access to the debt markets, which, as I just mentioned, is buying corporate bonds like crazy. So they have access to capital. They have good cash flows. They'll likely be buying their stock back to get their stock prices up. That's in the large cap sector. It's completely different in the small cap biotech sector.
Yeah, and let's talk about that. Is it only in small cap biotech, or is it in small caps overall that you see some warning signs?
Well, it's not so much of a warning sign. It's just people don't want small caps in general, and they don't want small cap biotechs in particular. It's almost if you can't give them away. So the disparity between large cap and small cap is very, very large. I think it'll get bigger this summer with the large cap names buying their stock back. At some point, probably around Labor Day, that disparity will probably be so wide that the big companies will start buying the small ones to try and increase their pipelines. So I think this is going to be a cyclical thing, and then we can start to reload in the start of 2023.
Yeah, and maybe the people, even as you're warning about small cap stock prices, they go, well, if a deal cycle is coming, maybe we wouldn't mind some exposure. Do you think that that trend could hold overall? I mean, as we've seen these companies down 80% from their highs and a lot of high valuation, newly public areas, would that be a similar evolution as what we're seeing in biotech?
Well, in the former hot names, they've come down so much, it's going to be a long, long time before they can get back to the highs. But they've come down so much that there will probably be some deals from these levels. And so investors at these levels, I think, could make some money going forward, because I think this correction is near the end. I mean, we still have headlines to come in the Ukraine. We still have headlines to come on inflation. But in general, it's likely run its course. And if we get above the 4,500 area on the S&P, hold that for a week or so, start to see the buybacks activate, then this is like what we saw in the prior 11 years before the pandemic. Stocks go rocketing back up after a sickening correction.
Yeah, you almost blink and you miss it. What about the most crowded areas in the market right now? Energy, defense, those kinds of places?
Those are hot areas right now because of the headlines. Eventually, the headlines will fade. So I think at some point, and again, probably that's over the summer, you want to be selling those into strength. Sector rotation is constant in this type of market. And so you want to ride your winners for a little while and then gradually sell them out as they get too hot.
And then as a parting word, is there anything you'd say about kind of where we could see leadership as this rally continues and maybe as this expansion continues, despite the recessions people are constantly worried about?
I think it's going to be concentrated in the largest buyback names. They've just started to outperform for the first time in a while. And I think that outperformance goes at least through the summer and probably into the fall.
All right. Always to the point, crystal clear. Brian, it's great to have you. Thanks so much.
Shepard Smith here. Thanks for watching CNBC on YouTube.